Okay, when we analyze a company's operations, we talked earlier about liquidity analysis. So that was one way in which we often analyze company operations. Another thing that we look at is profitability, and one of the ratios that we use for profitability is called the profit margin. We simply take the net income, the bottom line earnings of the company for the certain period of time, and we divide that by the sales for that same amount of time. If we have a high margin, then it means that we're generating revenue and we're also controlling our costs. Statement of retained earnings, we've talked about that in chapter 1, so I won't go over that again. Here's the preparation of a statement of retained earnings. We simply start with the beginning retained earnings. We then add the net income for the time period of interest, and then we subtract the dividends of that same time period, and that gives us the ending retained earnings. Notice that at the top of the statement, we show the company name, the title of the statement, and this is another statement like the income statement that covers a time period, and so our heading must communicate what that time period is. We also have a statement of cash flows that is also a time period statement. In this case, we're trying to show the sources and uses of cash from operating, investing, and financing. Here's an example of a statement of cash flows that's prepared. Again, we talked about the overall picture of a statement of cash flows in the last class period, so I won't go over this in detail. And then keep in mind that the financial statements that the company produces on an annual basis are part of its annual report. Investors typically like to see a classified balance sheet and a multiple-step income statement as opposed to non-classified balance sheet and single-step income statement, but companies can make whichever they want. It's their choice. The annual reports also contain a lot of other information. One of the important things that investors like to look at is the management discussion and analysis. We often refer to that as the MD&A. And that's because that's management telling the story of how they think the company is doing and what they expect in the future to some extent. But you have to be careful because sometimes they just make it a big marketing pitch. The annual report is audited by the company's auditor, or at least the financial statements that are in that annual report are audited. They also include the notes, the footnotes. Those will also be audited by the auditor, and they will help to explain the assumptions and estimates that might have been made in preparing those financial statements. All right, that's it for Chapter 2. So you can see that a lot of that was review from Chapter 1, so I went kind of fast, but you can play this as many times as you need to, rewind and fast forward and slow me down, but I wanted to not bore you because so much of it was overlap. Pay a special attention to the Hoyer Inc. examples that we went through in that, as those are representative of the kind of thing you might see on the exam for the 10-point problems. They're not exactly the same, but they'll give you an idea of what to expect. All right, now you should go on to Chapter 3.